welcome to the Mortgage Rate Weekly Market Update for the week of September 3rd, 2018. Happy Labor Day. Hello, I'm John Thomas with Prime Residential Mortgage. Here to give you your update. Well, last week, mortgage rates did move slightly higher. Take a look at the bond chart on the screen. You can see mortgage bonds sold off on Monday, Tuesday, and Wednesday after hitting a tough ceiling resistance the previous Friday. But on Wednesday, you can see they were able to find a floor of support. The bonds were able to rally off the 25-day moving average on Wednesday, follow through on Thursday and Friday. Now, Friday, they ended just above the 50-day moving average. So the short-term trend is for mortgage bonds to move higher, which could move mortgage interest rates lower. So what we're going to do is we're going to recommend floating your mortgage rate to start the week as bonds are just above the 50-day moving average. We're hoping they can rally off of that and go up to touch the level of resistance on the chart there at 101.988. So if we can break above that tough ceiling resistance, which we didn't do last week, but if we can, that would be a great sign for mortgage rates. We could see them move considerably lower. So for right now, go ahead and float. We'll see what happens in the bond market. Now, in economic news last week, U.S., Mexico, and Canada were discussing a new trade terms. U.S. and Mexico have already agreed to some new terms, which will replace the current NAFTA, or North America Free Trade Agreement. That is between U.S., Mexico, and Canada. So U.S. and Mexico have worked out some terms. Canada and the U.S. have been trying to work out some new terms. There was a deadline set by Friday. We missed the deadline on Friday. President Trump told Congress he wants to sign a new deal in the next 90 days. He said he would sign it with Mexico without Canada, but that does give U.S. and Canada 90 days to come up with a trade deal so that all three parties can sign a new agreement. Now, Canada is one of the few major economies that buys more goods and services from the U.S. than it sells, so it would be in the U.S. best interest to make sure we get them on board with that new trade agreement because we are exporting more to them than we import, and that is a rarity in the world for us. Now, we also saw last week the second look at the second quarter gross domestic product, or GDP for short. It came in at 4.2%. That was up from the first reading of 4.1%. So that's good news. Economy is steaming along. Now, if we were to take the first quarter reading and the second quarter reading and average those out and project it for the whole year, we're on pace for an average GDP for 2018 of 3.2%. We'll have to see how that trend continues in the third and the fourth quarter. Then we saw the Fed's favorite measure of inflation last week, which is the Personal Consumption Expenditure, or PCE for short, for July 2018. It showed that inflation increased by 0.1% from June to July on the headline number, and it was up to 2.2% year over year. Now, the core number, which strips out food and energy prices, it was up 0.2%, and it increased from 1.9 to 2% year over year. And that's actually the Fed's market. The Fed uses the core number as their favorite measure of inflation, and we are right at their target number of 2%. So we'll have to see how the Fed reacts to that at their next meeting now that they've hit their inflation target. Then we saw weak initial jobless claims on Thursday. Claims moved up 3,000 to 213,000 claims for the week. That is still a ridiculously low number. The previous week's claims remain the same at 210,000. That's the sample week to be used in the jobs report for August, which comes out this Friday. So with such a low weekly initial claims, we're expecting to see some wage pressure growth, inflation in the jobs report. So we'll have to keep a lookout for that on Friday. Now, if that does come out in the report, that could be bad news for mortgage bonds. So we'll keep you updated on that. Now, if we turn to the housing news, pending home sales for July 2018 were down 0.7% from June to 106.2 on the index. This was weaker than expected. Now, pending home sales are down 2.3% year over year. The pending home sale index is the leading indicator of housing activity. So it measures housing contracts based on a number of signed real estate contracts for existing single-family homes, condos, and co-ops. So we've seen the pending home sales trending lower, and that's because of two big factors: low inventory and mortgage interest rates moving up. But if we take a look at the S&P Case-Shiller 20-City Home Price Index, which came out last week for June, it rose 6.3% from June of 2017 to June 2018. That's down from the 6.5% in May, but that's still a very solid home price appreciation. So home price appreciation is slowing, but home prices are still going up. So this is not bad news. It's actually good news. We want home price appreciation in the 4 to 6% range because that's sustainable. Anything that's much higher than that, it's not sustainable. We could see a rebound lower. So we like to see this cooling off a little bit. Home prices are still going up. They're not going down. And I think we're in a good range there. Now, in the local news, the state of Delaware announced a first-time homebuyer transfer tax exemption for 0.5% of the state portion of the transfer tax. So the entire transfer tax in the state of Delaware is pretty high. It's 4%. It's commonly split 2% to the buyer, 2% to the seller. Now, of that 4%, 2.5% is the state's portion. And that's split 1.25 to the buyer, 1.25 to the seller. So the 1.25% of the state portion to the buyer, they're going to be exempted from 0.5%. So they're only going to pay their 0.75%. Now, they're also exempt from the county portion because that's been in place. First-time home buyers can be exempt from the county portion. The county portion is 0.75. So with the 0.5 from the state, they're only going to pay 0.75% of the total 4% transfer tax. So that's huge news. We got a lot more information in the blog post on DelawareMortgageLoans.net. You can check it out there. And then in the local news, we also got the next first-time homebuyer seminar in Delaware, Saturday, September 22nd in Newark, Delaware, from 10 a.m. to noon at the Christiana Hilton Hotel. And then Wednesday, September 26th, we are in Wilmington, Delaware, from 6 to 8 p.m. And then Saturday, the 29th, we are in Dover, Delaware, from 10 a.m. to noon at the Dover Holiday Inn. Now, we also got some coming up in Maryland as well. But the Delaware ones, you can register for the Delaware event. Give us a call in the office, 302-703-0727, or online, www.delawarehomebuyerseminar.com. Now, the Maryland events, we've got one coming up Saturday, September 15th from 10 a.m. to noon in Hyattsville, Maryland. And then we're back there again in October on Saturday, October 27th from 10 a.m. to noon. You can register for either one of those events by giving us a call in the office at 410-412-3319 or online, Maryland, homebuyerseminars.com. Look forward to seeing you guys next week.